I have now the pleasure to introduce Mr. Maciej Tomaszewicz from Deloitte, who will be moderating the mobility panel. Thank you very much.
Is it on? Can you hear me? Gentlemen, please come. Maybe we will take the same order as the pictures. Okay, good afternoon, ladies and gentlemen. I hope you are enjoying the session and enjoy the lunch. So we are having our first panel of this afternoon focused on mobility. We will be discussing around motor insurance in the region. However, obviously, in order to discuss the motor insurance in the region, we need also to provide some international context, and we have plenty of sort of international guests with us to provide that context to us. My name is Maciej Tomaszewicz. I'm a director within our financial services practice at Deloitte. I'm focused on insurance, and I'm passionate about insurance. And one of the everyday challenges that I have is, how to bring innovation to an industry which is traditionally very conservative. I also have with me 4 distinguished guests. Kamal is the founder of AutoWiz and one of the contestants for the hackathon. We have Alaa, who works for CAFU. Also we have Reto, who is a mobility insurance expert who I had the pleasure to work with before. And we have Niall, who works for Wrisk, which is a UK InsurTech company. Before we jump into the very interesting topics that we have to discuss, I will just maybe give 90 seconds for each of you to sort of tell us who you are and what you do, please.
So I guess most of you have seen my pitch, so very quick reintroduction. I'm Kamal Agarwal, co-founder and CEO of AutoWiz, coming from India. We are a vehicle data analytics provider. With insurance companies, we work with providing connected auto insurance solutions like UBI, crash detection, and digital engagement.
Alaa, please.
So before I introduce myself, I wanted to give a big thank you for those who have organized the event. It's an incredible opportunity for us to attend, and I think these platforms are critical for the future of this industry in particular. So a big thank you for hosting it. I know it's a lot of work behind it, and I hope this does come to successful fruition to everybody. My name is Alaa El-Huni. I'm part of CAFU. CAFU was born as an on-demand fuel delivery service where the gas station comes to you, fills up your car, and just as simple as clicking a button on your app. From there, we've grown significantly. We're the largest on-demand fuel delivery app in the world. We've completed over, I think, 7.5 million transactions to date. We come to vehicles almost 20,000 times a day, every single day, and we fill up fuel. We wash vehicles, we change tires, we change batteries, we do minor services, inspection, and a range of other services, all related to vehicles. We are what I think a lot of these gentlemen consider an ecosystem player, and it's a pleasure to be here. The reason I've been invited is I think we're very, very close to launching an insurance product, and hopefully by the end of next month there should be an announcement of an insurance product being launched.
Thank you, Reto.
Yeah, so first from my side, thanks for having me. I think it's a very interesting event and a good kickoff for the region. I'm the co-founder of Cubic, which provides ADAS feature and safety feature insights for the car industry. But I'm also acting as an advisor for startups and corporates all over the planet. Right now working on risk maps and geo-allocation for accidents. But what might be more interesting for you and relevant, I'm a former head of motor innovation, usage-based insurance, OEM strategy at Swiss Re and Zurich Insurance.
Niall.
Hello, my name's Niall Barton. I'm the founder and chairman of a business called Wrisk, based in London. A couple of firsts is that there probably aren't many other 45-year-old experienced people, 45 years in the insurance business, in the audience, who've also set up an InsurTech. And I used to be an underwriter at Lloyd's of London. So you couldn't think of two things more extreme, an underwriter at Lloyd's versus an InsurTech. My Wrisk is a platform that's designed for the global brands, the automotive brands, the OEMs, and distributors of car insurance. So a little bit different from some of the others today. We started in 2016. We worked with BMW and with some of the largest insurers, Allianz. And also a first here probably is that one of our first investors in Wrisk in our business was the QIC. So it's very nice to be back in Doha.
Thank you very much for the introductions. So let's start with the questions which I have for you, and maybe I would start from the left, Niall and Reto. We have so much technology today, and obviously this technology helps us in the insurance business as well. However, we depend so much on traditional models, traditional ways to price insurance, either it's in age or the car characteristics or the value of the car, so many other things. But is this still accurate? Can we really depend on these sort of old models? Where is the industry, where is the motor insurance industry going from now in the next few years?
No, I mean, I'd say, we were talking about this earlier, there's an inherent, sort of, in a sense, tension between the speed of the insurers and or lack of speed in many cases, and yet the enormous amount of data that's coming out of the cars. And so the OEMs want to be more involved in this whole process. They've seen that they make an enormous amount of money out of finance, not just selling the cars. And they see the insurance area as a whole new area that they can capitalize on, and also they need it to go with them to roll out some of the new business models, car subscriptions, right through to autonomous ADAS. So insurers, the OEMs, the car manufacturers are taking a lot more interest in this space, and they feel that they can provide probably a lot of the data for better pricing. So there's a sort of interesting dynamic tension, as I say, between, I think, the car industry and the insurance industry.
Thank you. And Reto?
Yes, I think I can confirm that being a head underwriter and responsible for motor business myself, it's pretty clear that today's traditional underwriting rationals are out of range. So it's statistics, it's history, but it does not fit anymore in the dynamic world, in telematic world. And there's nothing to find out anymore, even using AI. So it's clear that they need new data sources, like what's in the car, but also like what's the trip history of customers. I mean, everything could be interesting to add on. And I think the key message is like AI needs to be in the core, whatever insurance industry is doing in the motor sector in the future. And be curious and consume more data.
Thank you. So we touched on sort of the auto industry, data. There is a sense of sort of, a need for an ecosystem of players within the insurance value chain. And the question that I would make to you, Alaa, and Kamal, because obviously you are part of a wider ecosystem, is, how do insurers benefit from this ecosystem? And on the other hand, how do you benefit from partnering with insurance in the ecosystem as well? So maybe Alaa?
So we start everything we do centered around our consumer, our client, the user, and we believe that everything is based on them and what their needs and requirements are. What we've learned is that we are probably the most common touch point with a customer. We come to them, I say this all the time, 2-3 times a week, 4 or 5 times a month. We're a very, very common touch point with them. And unlike an insurance company or an OEM or so on, we have an open communication channel with them continuously. They fill up from us, we wash their cars, and this helps us establish a very strong relationship. They trust us significantly, and I think from an insurance company's perspective, there's several things of value that we could give them. We understand the client. We have a very, very large user base. Obviously, from a deal lead generation perspective, they see the value in us. But in addition to that, we know a lot more about that vehicle, about the driver, about their use, than they usually will have access to. And finally, the customers are a lot more comfortable sharing that information with us. So right now we have several use cases of connectivity or connected cars where the customers are giving us access to the vehicle. We know they let us read their odometer, they let us read their fuel level sensors, they let us unlock the vehicle to fill up the car, and this is actually happening today. And it's because the customer trusts us. From there, we can share some level of information that the customers is comfortable enough with us sharing with them to be able to help them better determine the value of that asset, the value of that driver, the utilization of it, and so on. Here's where I feel a bit of value can exist from us to them. And from them to us, I think it's fairly clear. Insurance industry is one of the largest. We initially saw insurance offerings, so as I think has been mentioned, UBI offerings or auto insurance offerings. But even beyond that, there's a lot of very creative solutions that insurance companies can create to support the development of the industry in itself. We know that the mobility industry is changing. We know that these assets only sit or are only utilized in ownership about 4 to 6% of the time. For 94 to 96% of the time, that asset isn't really being used. So there is this entire shift across the industry of how can we reimagine it and how can we reuse it and so on. And I think nobody better than insurance companies to help understand and underwrite how that can look like in the future.
Thank you. Kamal?
So just to add to what Alaa said, I think just from an insurer's perspective, just having more touch points, as you mentioned, with the customer is imperative. In the markets like we are in, we see so much competitive intensity, 20 insurers going after one customer. How do you differentiate? How do you create an engagement with the customer? So that's where I think insurance has to use these solutions, of course, from risk perspective, but also just from differentiating and anchoring the whole ecosystem. Now, this can be done by a strong ecosystem player like you, or in some markets, insurers themselves should take the lead and become that anchor. Because the way we see it is probably as a car owner, of course, I am engaging with my car maker, I'm engaging with my insurers. Those are two constants I deal with. And of course, I deal with so many ecosystem players. So it's like for insurers, it's like grabbing that opportunity to use these to just create more touch points and then anchor the relationships. So that's what I feel is the value for the insurer. And of course, for somebody like us who work closely with insurers, we can help them move faster on some of these initiatives, having those use cases which can be utilized by the ecosystem directly, because not everything can be done internally by the insurer. So that's the play for us.
Which I understand at this moment, but if I look at in the near future, with all the amount of data that you guys collect and can sort of do some pricing algorithms based on that, I mean, how are the sort of incumbents will play in this in the near future? Is there a risk that potentially you can replace them completely based on the information that you have? Maybe Niall, you can can start with
See, you
some.
wanted to put your hand up. You've got an answer too.
Alaa, go ahead.
Well,
Go
okay,
ahead.
I'll go first. I mean, yeah, this is a personal view. I think there will be continued, in a sense, deconstruction of insurers. Insurers, in some of the ones we deal with, very good at pricing, very good at claims, not so good at building technology. And so them having to come to terms with the fact that actually it may be better to deal with an external firm to do that bit. So they're good at asset allocation and, as I say, pricing, risk price. So it's I think a changing landscape of really, in a sense, what an insurer is, and using outside partners, which is, I mean, to my mind, in the last 3 or 4 years, I mean, in the last 2 years, some extraordinary changes in terms of, certainly in the UK, people buying cars online, having it delivered online. That would never have happened 2 years ago. In our case, subscription policies. They like subscription policies. We were told that they wouldn't like it. So if you buy your Netflix, your Amazon on subscription, why do you need to change your insurer every year? You don't change your bank every year. So a subscription policy that's very easy to use. And then we took on a portfolio of risks where quite a few of them were in their 70s, 70 years old. Well, they won't want to go and self-serve. They absolutely do. They enjoy it. They can do it 24/7, 365 days of the year, add their son onto their policy, easy, instead of having to ring somebody up. So some of the changes actually have been really refreshingly, available. But inside most of the traditional insurance companies, that's very difficult to do. So, from my mind, it's partnering with businesses who can deliver that and let the insurers do the things that they're best at.
Great. Alaa, you wanted to say something.
No, go on. No, go on.
Please.
What I want to point out is, as an insurer, I would not be concerned about the startups. As a startup, I wouldn't overestimate the power in the game. I think if you want to really free up the full power of innovation, digitalization, it means somebody needs to orchestrate the ecosystem. And let's talk about protection as a service, as an ecosystem, must be driven by insurance. But if you really want to be successful, then the two companies on the left of me, they are an added value service and even can have risk impact service, because you see scratches around the car, for example, while car data, telematic is the base to have dynamic proposition. But the insurers need to understand they also need to be dynamic and integrated to free up the full potentials. So I think protection as a service needs to be orchestrated, and all these startups are a really important piece, but only if they all come together, it will be powerful and successful. Otherwise, they all work in silos and not bring the expectation of the consumer to the market. So it only works together as partners, and otherwise you're all going to fail in silos. That's my main message towards
Fair to say, I want to work with both of these two firms on the left. And I mean that. So that's what it's all about.
Yeah, absolutely. I think this was the general feeling that we had when we first met each other, each one representing a different part of the industry. And the first thing we all said to each other is, oh, we should touch base and we should work together. And I think this is just a reflection of the way that it should be. We don't believe we are an insurance company, an insurance underwriter in any way or form, but we believe that in the ecosystem we exist and they exist, and we have to kind of work together, co-create, co-develop. We're a tech company. I'm probably the oldest person in my company, and I feel like I'm very young, right? And I'm by far probably one of the oldest
Sitting
ones.
next to me.
Yeah, and the reality is most of the people in our organization just are innovators or disruptors or young people that are looking at how can we change this and disrupt this completely. And not only are they employees in our company, they're actually users of our products or services. They're the consumers that we're offering our products and services to. So when they start initiating new ideas, they're not initiating it kind of as somebody who's in the company that thinks this should be done. They actually are initiating it as consumers of our products and services that are saying, oh, I wish we could also do this, because if this existed, it would make my life easier. And that's the mindset that we have. We try to partner with the best companies in the world that we can, with those that do have that mindset as well. A lot of what we try to develop is centered around the user, the customer, the consumer, and we have never tried to approach this from day one as something that we could do ourselves. We will never know how to create an insurance product better than the insurance companies. We're never going to know how to change oil or lubricants better than the best lubricant companies in the world. And that's why we partner with them to provide the best service possible.
Excellent, thank you. The power of the ecosystems and the partnerships, and which is basically, this event is all about that as well. You said disruption, you said changes. Obviously, we came through the pandemic to live on a more sort of digitalized world. And one of the things that emerged is again some new business models around insurance, and we have the usage-based insurance as one model in the industry. How do you see, do you really see a shift to the UBI model currently? Because it's something that exists for dozens of years. However, we are starting to hear more and more about it, especially in this region recently. So the question is, I don't know, Reto, how do you see the shift to UBI happening?
If we mainly focus on mileage-based insurance, usage, time-based insurance, then the expectation of the consumer is clear. COVID showed it, lockdowns. Why should I pay motor insurance if I don't use the car? Then there's clearly a trend towards digital services. I think people are willing to share data, also because they had to share COVID results, right? I think the community, the consumers are ready. The insurance industry is not, because it's not as easy just to put up a telematic proposition that is working in a silo. I think true UBI is only feasible if you're integrated. Means you have monthly changing mileage prices based on your behaving, means I can buy on-demand services when I need them. It's fully digital, I can quit and I can pay on a monthly base. That means telematic solution provider needs to be fully integrated with your backend systems. So, digital FNOL is maybe not the end, right? People want to know about the status of the claims and so on. So the answer is fully integrated, and yes, the market is ready for UBI, especially if you see new mobility trends where all the business models are usage, time, and mileage based. So it's a clear trend. Everybody charges that way, so insurance will be forced to do the same. So my recommendation is better start today than tomorrow.
Niall, do you have the same view? Or?
Yeah, yes. It's in the UK again. I'm it's a country of one example. It definitely has become more of a feature, but probably not as much as people thought it would. And in our case, we've got a UBI proposition. It's still not frictionless enough. It's still the drop-off rate is quite quick early on. And so, there's work still to do on that. So I think as a proposition, it will definitely be there. As I think Reto says, it's got to be integrated more. So, the dreaded word embedded is the theme I think that the customers want. They don't want to have to switch anything on and off. They want it to be absolutely part of their living day. And if so, yes, I think it will be.
But isn't one of the reasons, maybe because it's still a yearly premium, and just collecting data and interacting is dynamic, but the rest is static as it is today, and that does not fit with the expectation of the consumers. Yeah.
And Kamal, you obviously you showed our solution around data and UBI today. What is the market in India? Is there a sort of great customer demand for the services?
Yeah, actually, India is unique in the sense I was talking about competitive intensity. We are underinsured, but on the motor side, there is a mandate to have insurance. And customers, we've been talking to end customers, and customers are ready for such kind of product. Even the leading insurers, as well as the laggard insurers, are ready for that, because the leading ones want to differentiate, the laggards want to have new product to capture market share. And in our country, it's the regulator was a bit behind, but certainly, we see through insurance sandbox, regulatory sandbox, and opening up this sector, we are quite bullish. In the next 2 to 3 years, we'll see mushrooming of products. Now, how much is the adoption going to be, whether it's going to be 10%, 15%, or so on, remains to be seen. But we definitely think in like commercial lines, in especially personal lines also, where people are driving less, they're definitely amenable to this. And so we see in India as well as some of the other emerging markets, experiments happening with different technologies, and as you mentioned, that more integrated play, not just measuring miles, but having the full flow in terms of payments, in terms of servicing, filing claims, everything moving digital.
Okay, yeah, I do sense, a lot of buzz happening around UBI. However, we still have, the core challenges, and one of them is the customers are not willing to provide us information. They are sort of careful about the privacy and how, the confidentiality issue around the information itself. And obviously, you cannot build a UBI model or use a UBI model if you don't get the information from the customers. On the other hand, the insurers, not all, but many of them, they think, well, UBI, what does this mean for me? That it really means that I will lower my premiums. That's the first reaction. I'm going to lower my premiums, which will have an impact, direct impact on my top and my bottom lines. Reto, any thoughts about, what are, based on these challenges, what is really the benefit for moving forward with UBI from a customer and an insurance perspective?
I think that the problem today is, again, it's monitoring the driver. It's the driver shares data with you, but where's the benefit, right? You get a score hoping that you get maybe a lower premium, but you get it at the end of the year. I think once you really become dynamic, right, and integrated, then you give freedom to the customer to influence his premium. If he does not pay insurance when he's using public transportation, this gives him freedom. When his good speeding behaving means he pays less per mile on a monthly base, that gives him freedom to influence his premium. If I use digital interaction and data sources to provide added value services as CAFU, it makes my product more attractive. I think the problem is today's UBI proposition are not focused on the customer needs. It's about collecting data and help insurers. And I think that needs to be turned around dramatically. It's all about the customer. He needs to benefit, he needs to get freedom, he needs to have on-demand services, and it will pay out for everybody else in the ecosystem. I think that's as simple as that. It sounds more complex, but it's all about customer centricity. Do it for the good of the customer, and then they're going to buy it.
Kamal, you want to comment on this as well?
Yeah, just one thing. I mean, to your question, some of the insurers we talk to, they are okay with having reduced premiums, but
not in this region.
but building a book of safer customers. So it's what type of segment you are after. So naturally, those who will participate in the program, self-selection and those sort of things will kick in. So some of the insurers, again, we're talking about a market where we have 20 players. Some of the insurers are fine with having reduced size but with lower losses, and that's the segment they're going after.
Which is the way to go. I do agree.
Can I say something a little bit contentious, if I may? I know that we're in an InsurTech event, and that part of the reason we're discussing this is how does it affect the insurance companies. But to be honest, a driver, somebody who owns that vehicle, is operating that vehicle, insurance is not the most important thing in their mind at that point in time, right? When you buy a vehicle and you drive it, is insurance everything that's going through your mind? And the truth is, no, it's not. It's one of those things that we hate. We hate to pay it. We don't like it. It's not a good user experience in any way or form. And it's just a must that we have to do it. I think that the way we approach it is very differently. We do collect a lot of data and share that data with our clients and so on, but that's because a vehicle is usually the second largest investment that most people make. So they have their homes, and usually a vehicle is probably the second most important thing that an individual invests in. And in there is where that data helps them better safeguard that investment that they're making. Not for insurance, not for this, for the investment that they're making. So we can speak to them about fuel efficiency because they spend so much. If you leave your house 5 minutes sooner, you're probably going to spend a little bit less on fuel. The value of your vehicle is going to be worth X and so on. And that's really where our conversation on the data with the client exists. We try to create a full profile and a ledger of their vehicle so they understand the value and everything that they do, how it impacts it. Now then, one of the applications of this data can be for insurance, but I don't think it should be centered on the acquisition of this data for insurance. The acquisition of the data is for the user. And if one of the applications is insurance, absolutely. If another application is for something completely different, then absolutely, as long as they're comfortable with that being shared. Is that fair?
Absolutely, absolutely. Good, thank you. So I would like to move to another topic, which is around this shared mobility. And let me just tell you a little story before I introduce the next question. So when I was 3 years old, my parents lost me. Not for long, but they lost me for some time. And we were spending a vacation on a place which was beach or sea on one side and a big forest on the other side. So they were panicking. After a few hours, they found me inside the car, pretending that I was driving. And basically this is to say that I have a passion for cars and for the auto industry since I was little. I always had wanted to have a car, I have cars, and I want to have better cars. On the other hand, my son, who is almost 15, he doesn't care absolutely, the car is a commodity for him. It's just something that takes him from point A to point B. Doesn't care if it's a Ferrari, Porsche, or a Volkswagen, completely independent. And I sense that obviously his friends also sort of think the same way, and the majority of the younger generation goes in that direction. Which takes me to the question of, the future looks to be very much about shared mobility. So I want to go from point A to point B, then I will get the best service that does that journey, right? How are you thinking about your business models, or business models that you've seen, looking forward into that sort of sense of shared mobility, in terms of obviously the impact that has on insurance, because the more shared mobility we will have in the future, the less need for insuring your car as a sort of one-time insurance. So how are you sort of perceiving this change and potentially shaping your business models towards that?
Shall I go? I mean, bear in mind, in my case, it's the car manufacturers who are our client. So we're looking at what's changing in their business models. So yes, subscriptions. So we have to provide subscription insurance, providing fleets, providing multi-driver capability. So in a sense, insurance has to go with them in every step of the way. Insurance is a sort of as a lubricant of their business. It's a lubricant of the global economy. So we just have to be thinking, we have to be knowing as Wrisk where their business is going and making sure insurance is never going to be a blocker for them being able to deliver what they want to their customers.
Reto?
Yeah, I think the customer base is changing. It goes definitely towards B2B2C. So I would definitely recommend to get ready for B2B business, but serve the consumer. I think in on-demand mobility, let's say it that way, there's a car that needs to be insured. This car will be much more often used than today because it's not 90% parked. The driver is changing, but we also need to expect that the driver has like his personal expectation in insurance. Means you need to customize, you need to offer the renter that he customizes insurance. And this is on-demand insurance, finally, served by a B2B partner in a digital proposition. So I think everything that today UBI requires is the first step into future mobility, because it's the same buzzwords, the same functionalities, but you start getting ready for the future, and this future is coming quite fast. And finally, we end up with robo-taxis, where most likely we're going to face product liability instead of motor insurance, but that's another topic, right?
Alaa, would you like to comment?
Sure. I guess there's three things that were discussed right now. One is MaaS, which is mobility as a service. These are the car sharing platforms, so on, your zip cars, your car2goes, these platforms where instead of owning a vehicle, I could use it just for the usage that I want. These are very, very good customers for us. We have full-fledged integration with them, and we provide a lot of services to these companies as ecosystem players. We have connectivity. Whenever their fuel level sensors hit a specific percentage or enough transactions, automatically their system and our system communicate. They place an order and we come fulfill the requirements. Whether that's fueling or charging that vehicle, whether that's washing and sanitizing the vehicle, so on and so forth. So we understand these players very well. I think with them, one of the impacts is it's not just a usage-based insurance on the utilization of that asset. It's a user-based insurance that's also based on the utilization of that specific user, because he might use this asset today, that asset tomorrow, that asset after tomorrow, and hence you're not just looking at UBI as usage, but user-based insurance as well. With the other two, I think the gentleman touched on them, and it does make a lot of sense as well. So if we ever get to a point where it's autonomous, then is it really now insurance for the individual, or is it really for that asset in itself and the system that's managing that asset in itself, and how do we insure that behind it?
Great. Kamal, would you like to add to this?
Well, just from a tech perspective, I think what we are looking at when we look at shared mobility, or what we look at multimodal scenario, where, as Niall mentioned, a user could use a car one day, a shared asset, maybe a gig worker doing a two-wheeler. So as a technology, you have to be seamless. If you are, for example, measuring driving behavior through a smartphone telematics app, you should be able to automatically figure it out that right now I'm on a own vehicle in a car, or I'm on a bike, and I'm able to, understand, or okay, I'm now in a public vehicle, and being able to sift out that data so that when I'm risk scoring a particular user, I'm doing that accurately based upon the mode in which the user is.
Great, which leads me to a question, because all of that you just mentioned, you need something which is sort of dynamic pricing, right? You need to price based on the vehicles that you are using and the way that you are using. And there are some challenges regarding regulation around that, not only around dynamic pricing, but I'm sure that Alaa from CAFU had a lot of regulatory challenges to deliver fuel to houses around the UAE. Potentially, I don't know how you managed to go into garages, in buildings, etc. We also have, regulation around data, confidentiality, etc. Well, my question is, how do you see the regulator reacting to all this innovation that you guys are driving, and what are the discussions that you are having with the regulators, and how fast are they adapting to your new ideas? And I will start with Alaa because he knows the local context.
So I think you've put it very mildly. We started delivering fuel in a region where oil and gas is the most important industry, right? And we are a very small player coming up against these big, well-established, oligopolistic or monopolistic kind of industry, and came to try to deliver. It was a very, very difficult, daunting task ahead of us. And putting it lightly, yes, we did have a lot of difficulties initially. And I think we're never going to stop facing issues on this. Now, I think a regulator's job is important. They're there to protect the citizens. They're protecting the consumers. They're protecting on behalf of the government. So their job is very important. I think the one thing they need to kind of work with us is understanding that it's not just regulating the digital, it's regulating during the digital era. Everything is changing very, very, very fast-paced, and they have to understand why these changes are happening, and not just to try to regulate what's happening, but to understand how do we regulate during this era where these changes are occurring. We're faced it initially with obviously the regulators of oil and gas, of petroleum and so on, but because we work in so many different industries, we deal with a lot of different regulators. So on the insurance side, we have to deal with the insurance regulators. On the fuel delivery side, we have to deal with that, with civil defense, with every single regulator that you could imagine. And the main thing, the approach that we try to have is we try to explain the technology with them, help them develop. The truth is we're innovators. A lot of what we've done has never been done before anyways, so it's tough to regulate something that never existed, and we try to build it from scratch. One approach that we do is we try to meet every single regulator's requirement. So when we first launched fuel delivery, we did not just meet the UAE's requirements, we met USDR, NFPA, US, Europe, UK, every single regulatory regime's requirement all over the world. So that then anywhere we go in the world, we're like, here you go, we already meet here, there, and that's the approach we've been having.
Good, thank you. Niall, on a sort of international UK context, how do you deal with the regulators?
Okay, so I'm going to confound you because I'm going to add a note of optimism. Two cases. One, in the UK, when we said we wanted to do a subscription policy, the most insurers gasped and said, we can't do that. We worked with the regulators, we got it done, and it's now a very popular feature on the market. So, my hats off to the UK regulators for embracing it. And the second one is, interestingly, and there's an interesting parallel possibly for Qatar, is that the UK have set up a corridor with the US. It's actually with one state, with Connecticut. The US insurance system, for anybody who doesn't know it, you have to file your rates every year, or as often as you want. I mean, to my mind, the American insurance system in some cases is more Soviet than Russian. There isn't the flexibility that you would have everywhere else. And so the US insurance regulators are realizing that they've in order to satisfy customers, and that's a key test for them, they need to be more innovative. So they've set up this corridor so that there are now 110 or so InsurTechs based in London, and 10 have already applied, including Wrisk, to use Connecticut as its base for insurance innovation. So we've got, and the insurance commissioner himself, had a meeting with me, and I said, look, I want to bring this into the US. It's customer friendly. It hasn't been done before. Will you let me do it? Are you allowed to by statute? He said, yes, I can do a waiver. I can allow you to do it for a controlled experiment. So that, for me, is a regulator who is being proactive, and Connecticut is seen as the I was there this week, and they describe themselves as the insurance capital of the world. Based on today, I think Doha should be seen as the insurance capital as well. That's your ambition. And actually, I'd go along with Alaa. This is an extraordinarily well-organized and really interesting event. I think there's an amazing energy from it. Anyway, so going back to the question, I think, the regulators, engaging with the regulators, respecting them, they're incredibly important stakeholders, but showing them how these things benefit customers absolutely is possible. And you have to experiment a bit. You have to. And sometimes they won't work, and so if the experiment is small enough. So I'm an optimist, actually, about the role the regulators will play.
Thank you. We're almost running out of time. We have just one question.
There's a question from the crowd.
Okay.
So, insurance pricing changes with autonomous cars and electric cars, right? How motor pricing will change in line with auto industry changes? From the crowd.
So does it have to do with dynamic pricing, which is something that we just touched
I believe it's more with with the coming of autonomous cars and electric cars, more connected vehicles, right?
I think
would that change?
Reto,
Yeah.
would you like to
Yeah,
comment on
happy
that?
to do so. First of all, autonomous driving, autonomous cars is something I'll try to manage for several years. But as I mentioned, I founded my company because I was in close relation with OEMs and doing partnership business with them. I think for the insurance industry, it's about time to find out the impact of advanced driver assistance systems in this specific car. So it means start to understand what semi-autonomous driving means today on your risk, because it is significant, I can tell you. Up to 40% better risk if you know which systems are in which car. And this means you start learning towards autonomous driving. Then the next logical step is to start collecting connected car data to understand whether these ADAS features were enabled, disabled, to understand whether a harsh braking event was done by the driver or an emergency braking system. And these are the two next logical steps to understand risk of autonomous driving. Of course, this system evolves, there will be new systems, but you need to start learning because it's going to happen faster as you believe. We are already in the age of semi-autonomous driving, so every car brand out there offers you emergency braking, offers you lane keeping, death arrows, spot identification. But what does that mean for the insurance industry? The insurance industry still knows about make, model, type, the price, the weight, and the horsepower. That's it. But the technological evolution in the last 10 years is tremendous. And you need to start to understand what it means to have a well-equipped car versus a standard car. It's about time.
We were talking earlier about Tesla's example in the US. It's no accident that they are starting to take more risk because they got better data advantage. So, I think it's certainly likely as you go, with autonomous, obviously they're going to need to take the liability, but I think they're going to start to bear some of the insurance risk themselves.
Yep, they probably will. So our last question, and I think that this one is something that the audience is also looking forward to. Can you provide us sort of the Top Gun Maverick sneak preview of the sort of cool features that you are going to be launching in the market soon, or you heard that the market is launching soon? I know that Alaa is launching something around insurance. Maybe you can start, just tell us a little bit about that.
Sure.
If you can.
Absolutely. On the insurance side, and like everything that we do, it usually comes from our customers. And we started understanding that our customers do see a pain point currently with the journey that they go through to adopt insurance. But from there, we try to reimagine and ideate from the very beginning, how can we reimagine this from scratch? Instead of going through what we're going to launch now, we want to kind of go towards the future and say, what does the future of this look like? And one of the things that as a group or as a company, through discussions and user interfaces, we're starting to understand that there might be more of other models that make sense for them. So what is the total cost of ownership of a vehicle? A lot of us don't understand that. When I pick a car to buy, am I taking into account how much am I spending in fuel, how much am I spending in tire changes and servicing and this and that and that and that? That's leading us to look at vehicles as a subscription, which others are looking at. And we feel that from our perspective, that's a direction we want to move towards. So everything related to your vehicle put together, how much does that really represent for you on a monthly basis? As opposed to having to pay X today and Y tomorrow and this separately and that separately, is to bundle it all up. And utilize your vehicle as a service, as a subscription, and have a completely centralized type of cost behind it.
The super app of Auto. Good. Any other ideas? Any other things that you're seeing in the market or you are doing?
I believe it's going to be really impactful, and it's a bit linked to what Google is doing. I'm working on a so-called normal sigma, which is contextualizing geo-allocated accident information with traffic volumes, with weather condition, time of the day. And what we provide right now is like you can provide your customers a risk report around his home. So raise awareness and attention to risk around your home address. But the next step is that we will come up with a driver warning system. So the driver gets actively informed that he's entering a risky zone. But not only from a geographical allocation, AI-based meaningful information. So if you drive there at 10 o'clock and we know it's not risky, you're not going to be warned. If we know this is only dangerous in a sandstorm, we only get an information if there is a sandstorm. So using AI to warn the driver of risky areas to reduce risk, that's what I'm working on and which will come to the market quite soon.
Good, thank you. Niall.
Am I allowed two?
One at a time, please.
One, okay. Okay, I'll say them very quickly. One is something which we're about to roll out, which is, in a sense, it's not very clever at all, but it's indicative pricing. So when you go onto a car configurator, you choose your color and everything else, it will play back to you your indicative insurance price based on the limited amount of information you've given, so that you can see what the cost of ownership is. So that's something we've been working on for a little while, which will be rolled out soon. The exciting one is that we're starting to work with a digital bank and using the open banking data that they have. And so, that's a frontier that I'm looking forward to working with the insurer on to see what that opens up.
Good. Kamal?
I'll touch upon the same thing I talked a little earlier, that in market like ours where multimodal is there, a lot of two-wheeler drivers along with car owners and so on, and people switching from one mode to another. Our next cool feature is in our products how we can use AI to really do a risk pricing or correctly judging the risk based upon automatically detecting what type of vehicle they are driving. So that's one that we're working on.
Okay, great. Thank you very much. I think that it was, at least for me, a very insightful conversation. Thank you all. I think that we went a little bit above 45 minutes. I think that we could spend the whole afternoon talking about mobility. Again, on behalf of myself, the organizers, the sponsors, thank you very much for your time and for your insights. Thank you.